Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
In today's video, we're going to talk about systematic investment plans. SIPs are a powerful tool that many of us use in our wealth creation journeys, but there are some simple do's and don'ts that we tend to miss out on. So let's take a quick look at how we can optimize the way that we're using SIPs in our portfolios and practicing the best out of these habits to ensure that we are on track with our wealth creation targets. The first thing that we need to know about SIPs are that they are systematic investment plans, which means that there's a plan and there's a schedule and there's a timeline. And the most important thing is for investors to stick to it. A lot of us are oriented towards measuring how our SIPs are doing in terms of returns, but we hardly ever look at the flip side in terms of units. So if we're constantly measuring the success of our decision through the returns that we're making, what we notice is when our SIPs tend to do better, we would want to be investing more. But this would automatically mean that we're investing at a higher NAV and reducing our prospective returns. Whereas if we start measuring performance in terms of units that are earned per SIP installment, then the signal that we would receive is that whenever you're seeing your SIP return reduce, automatically the number of units you earn for that installment goes up. And this could be a good measure of indicating when we should be scaling up and how much we should be scaling up. The second most important thing that an investor needs to know as far as their SIPs are concerned is that all funds are not equal, which means there are some funds in which SIPs work better, there are some funds in which lump sums may work better. Now, if we try to decode what this means, SIPs in all-weather funds that have very flexible mandates tend to work better because the fund can adapt to changing market conditions, whereas SIPs in very niche ideas or themes. So if you're looking at a very narrow sectoral or thematic idea, then maybe an SIP is not the best route, because even cost averaging in this idea is not going to help you a lot. And this is something that we wrote a market wrap about recently, because buying the dip in every idea just doesn't work. So SIPs have to be used judiciously in the right funds at the right time. The next thing that we need to know about SIPs are that over a period of time, however small your SIP is, your portfolio is going to become or gather the value of a lump sum portfolio, which means you can't treat it the same way anymore, and you must review and rebalance your investments just to ensure that you're managing risks and rewards quite effectively. The fourth thing that we can do with our SIPs is to ensure that we're mapping them to a particular goal. When we have a goal in mind and a timeline set in place, we tend to be more disciplined. SIPs are not structures where we should get into the habit of breaking them to meet emergency expenses or short-term goals. You can always run a separate SIP for that and make sure that your long-term goals are unaffected by your short-term financial needs. And the fifth point is that whenever you start your SIP journey, we should remember that this is in the end and there's always a good reason to step up. So with every increment in your income, you should be raising your SIPs. And we have a lot of flexibility in how we're going to be able to save. You can do daily, monthly, weekly, or quarterly SIPs that are running in your portfolio. This ensures that you're able to participate in the market on a frequent basis. And when we step up our SIPs, we ensure that we're always saving more and keeping our savings rate at a healthy ratio, rather than looking at a fixed amount that we're saving over a period of time. When you step up, this can be a game changer, and here are some illustrations to show you the difference between an investor who just does an SIP, somebody who does an SIP and a step up, and someone who's also able to contribute lump sums to their portfolio. So how much you invest can be a game changer in your wealth creation journey. If you'd like to know more about wealth creation, then you can subscribe to our channel and we'd be happy to give you more updates.